One for lateness from Chairman Horrell. Anybody else? Okay, somebody like to move that? Thanks, Councillor McPhail. Seconded, please. Councillor Beard. All those in favour, please say aye.
Aye.
Against? Carried. Thank you. Declarations of interest. Public forum. Confirmation of minutes of the 1st of April. Thanks. Anything? Somebody like to move that and then we can...
Sorry, can I?
Yep.
Pleasure, I've been reading them, Lundell. Apparently, I was present from 9:08 a.m, but the meeting started at 10:30.
It's very conscientious of you being an hour and a bit early.
Eric was from 9:31, the meeting started at 10:30 as well, so, and also Nickel, so I just wondered where those dates came from, and whether they're relevant.
You work by the hour.
Yes.
You work by the hour to get another extra hour.
So with those timing corrections, I'm assuming that they're an hour out actually. Is that just what that
I'm
is?
happy to move that with those corrections.
Thank you, Councillor McPhail. Seconded, Councillor McCallum. Any discussion other than that? With those timing adjustments, all those in favour, please say aye.
Aye.
Against? Carried. Thank you. Okie doke. I've got no notification of extraordinary or urgent business and no questions, and there is no...
I haven't asked you this question, but I'm just having a quick look through the minutes. There is some stuff there that we've decided on, or there's some follow-up work, and I'm not sure whether we always get it back. It comes back, or the decisions in the minutes have been actioned, and then, because we don't have a matter arising, but there's some things that you're going, it would be nice to know where we're at, because otherwise we only get it if there's an urgent need.
So, what would you
It might be
like?
quite good sometimes just to have an update of where the last meeting or some of the work that's in progress has actually got to, just so that we can get it, or it's been programmed into.
How would you like that to manifest itself? Any
I
suggestions?
think let's just keep it in the back of our minds and then see what happens later in the meeting. Maybe ways that we can do that as we think through.
Okay. Valid question. Maybe we could have had that earlier.
Well, I just thought of it then. Sorry.
Okay. Did we move that? We didn't. Yes, no, we don't.
No, it was just a
Sorry.
comment.
We have no chairman or councillors' reports, so we'll move on to item 1 of number 9, thank you, which is the financial report. Oh, and before we do that, remiss of me not to introduce Chris. Chris Wood is our acting...
General Manager, Finance and Corporate.
There we go.
Very title.
Yes, wouldn't even fit on a plaque. So welcome, Chris.
Thank you very much.
Looking forward to your advice and guidance. And anybody else, I'm sure will ask you anything they need to know.
And I may well defer to Tanya with the questions.
Good eye, thanks very much, and welcome to our merry band.
Sorry, what's that?
One holiday meeting.
One holiday, there we go. All right.
Rightio, thanks. Tanya, item 1, please.
Thank you, Chair. So we're presenting the financial report for the 9 months ended 31st of March, with particular emphasis on the forecast to the end of the financial year. I'll assume that the report in total has been read, but I'd highlight to you some key and important items that have arisen. The deficit for the period is 2.5 million versus a budget of 5.4 million. Still an operating deficit. The forecast deficit for the end of the financial year is 6.7 million versus a forecast original budget deficit of 7.8. Improvement there on the original budget of $1 million. Some of the key items within that, we have other income, $1.6 million above budget. It's a variety of things that have come in as a result of contributions to river systems following the floods, and some sundry contract income that's arisen during the period. In the expenses, we're continuing our favourable variance in the people cost, and that will hold till the end of the financial year. Contractors and consultants currently favourable, we expect it to come close to budget by the end of the year, just over in fact. And operational, we continue to spend a bit on river works from the flood last year. Quite a bit actually, in fact it's over 900,000 now that we've spent above budget as a result of work that we carried through. In addition to that, there's a $500,000 of insurance claims, our last claim. So in total, $1.4 million of river works additional cost in this period, 9 months. It's coming to an end though because of the season. Our dividends are on track. Our investment portfolio, $2.4 million above budget. We're not budgeting and continue not to budget unrealised income. And I might point out that this time last year, we had in brackets there 1.1 million. As a result of COVID, our portfolio was this time last year heading in the other direction. Quite a significant difference at this time. Our final result then, including investment income, will be a small surplus of 270,000, give or take, versus an original budgeted deficit of 2.7 million. So a change of 1 million in operating and 2 million from the investment portfolio. Before I turn the page, Chair, was there any questions on that?
Seemingly not. Carry on.
Oh, sorry. No,
sorry,
sorry.
yes. Chris?
Let me just get a couple of questions, please, Tony, if that's okay. I was just wanting to cast my mind back to the work you did with TBD and your good work in terms of what was the financial strategy that we had over the 5 years to get, or we didn't choose to, but the 5 years to get us out of the hole. And I just wondered, this is tracking more favourably, our forecast for year end, than I presume the TDB or your work, I'm sorry if I don't know what to call it, the strategy work that you led in terms of actually going forward. Does that have any impact on our financial strategy? We're better off than we planned to be better off, to the tune of, as you've noted, $3 million. Does that affect our financial strategy going forward?
So we've had some discussion about it even today. The operating surplus we still have an operating deficit. I think we need to be clear that the operating deficit is funded by investment income, dividends and marine fee. So we likely will be $1 million better at the end of the year in our operating expenses, but we do have a strategic plan to reduce some costs heading into next financial year with our increased investment. So I think I'd like to say it's actually all on target. The investment income we don't count on and won't count on until it's a little bit more solid. And I think in our workings with the LTP, we've come to the understanding that we need to have at least our resilience reserves in place, plus a reasonable margin. And at that point, we can look to see if we've got any other choices.
Right, look, that's helpful. I mean, obviously, I'm not, and haven't been party to those discussions, Tony, and that's not a complaint, by the way. So I think the critical thing you're saying to me is that we have plugged this financial result into our thinking about the strategy we set ourselves from your work in TDB, and that has been picked up in the LTP as well. Because otherwise this could have an impact on our view in the LTP.
Absolutely. Our base budget for the LTP is this financial year. And from that, we have some expectation that some expenses will be moved around. There will be a net investment of $2 million into the system.
Okay, I get your point. Thank you. That's great.
Councillor McLeod?
I don't know whether I'm doing an investment report or a cash flow report, just talking about, if we've made a big gain, a realised gain, can we bank that would actually give us security and it might whether it's offshore or just taking risk out. I can't remember what the long-term plan, how much we need out of the investment portfolio to keep things ticking away.
So,
Is it trying to just bring us to a different level? I can't.
you can't do that unless you actually sell it
Yeah, I
to
know.
bank it, so.
And it's to put it into a less, where the exposure, I'm just saying if we're way ahead, I'm just trying to, but it might be in the investment.
We could bring that up, we could discuss that, Chair, in that investment report.
Councillor McCallum.
Thank you, Madam Chair. Following from what Bruce was saying, I presume that we're in a better position going into the long-term plan with this effectively better position. We can argue about the numbers, but if we went into that with a different number, like a negative number, so we're actually worse off, that's even a harder place to actually be. So it gives me quite a bit of confidence that what we're putting in place internally in the systems and holding people account is actually coming through. We're getting better results. We just got to make sure now we line the money up with the work. We've got to do the work, even though we're saving some money somewhere, somehow, the way we do business. So the work's more important.
Absolutely. The next page, Chair.
Yep, cross.
Well, just one comment on that unrealised capital gain. And I know everybody around the table is fully aware of it. It can turn against us just as quickly as it has come through this year. And indeed, I think this last month, we've seen nervous jitters in the global markets and they've gone backwards. So whether we do realise at the end of the year a $2 million unrealised gain, that is doubtful. And I just think, I'm sure you're all aware of the risk around that, and reliance on unrealised gains to balance the books is not a good place to be in the longer term strategy. And that is why the long-term plan is predicated solely on operational income, funding operational expenses, and not reliance on that capital gain or loss that may occur to come to the bottom line break even, which is where we're forecasting at the moment.
Excuse me, first question, Chris, does your strategy rely on the dividend?
The long-term plan has the dividend from Southport built into the 4.5 million.
So it's only the unrealised
It's only
gains.
unrealised gains that are at risk. The auditors looked at that assumption in the long-term plan of the inclusion of that dividend from Southport, and they were supportive of that inclusion.
Yes, that's
Of course, there's risk around that as well, but they were comfortable with that inclusion.
Page 29 picks up your comments around the volatility of the fund.
I think so. I know everyone around this table is fully aware of that risk around that, but it's been a grand period. And you look at when Tanya talked about the investment report from JB Ware, it's been a grand 12 months of 20.5% return. That cannot continue.
Obviously, that's last year too, so.
I'll probably, no,
Nobody knows.
that's exactly the point. That's exactly the point. Yeah.
Page 16, Chair, is the comprehensive revenue and expense by activity. By the group of activities, our focus groups, and we've this time pulled out government funded and separated it so that because as our spending ramps up now, it's becoming more significant. So you'll see that we've earned 2.5 million and spent 2.6 million at this point of operational income and expenditure. So it's not representing here capital expenditure, that'll come through in a separate report. But this is largely money from biodiversity projects, including wild and fauna projects. And as I mentioned at the last meeting, the expenditure for these groups can be seen in the details towards the end of the report in those graphs there, which highlight which areas are under and over budget. Page 17.
Can I just make a little bit? The operating revenue under some of those categories, how do you allocate particularly the rates revenue, or particularly you've got a line saying corporate, and we've got a corporate actual of 3.1 million and we budgeted 1.2, so we've made a reasonably significant gain of 1.8 million in the corporate area. So how do you rationalise or explain that?
Yeah, it is a bit difficult, isn't it? It's not so much the rates, councillor, in that particular one, it's the investment income. So each line of our budget has to be allocated to a group of activities, and the corporate, the investment income is allocated to corporate. There are no rates allocated to corporate.
Right, so it's the investment income line, that's where the corporate revenue is. So that's, we'll be keeping an eye on that one, Chris.
That's absolutely the point, I think. I mean, the point is that this particular table incorporates that $2 million unrealised capital gain. So this is a comprehensive revenue and expenditure. It's not the operational bottom line, it is the bottom line that incorporated in this report, includes that unrealised gain.
Page 17, our significant expenditure to date on climate resilience outlines the shovel ready. You can see that we've, at this point in March, received $2 million and spent 383. A lot of progress has been made since then, so I believe that's over $1 million now of expenditure for shovel ready. We've got a lot of our income in for biodiversity projects, but still some more coming as we earn some more contracts, and that income will be spent over the next 3 months. In the capital expenditure, not a lot occurring there. Some fleet still to be purchased at the end of the financial year. And the major projects, we've added that column budget year to date. I think it was asked at the last meeting by Mr. Robertson. So we've got year-to-date actuals, year-to-date budget, and life-to-date. Page 18, statement of financial position, our balance sheet at the end of March. There's nothing significant to report except we continue to hold funds on behalf of those projects that we've just talked about of $3 million. So of our nearly $13 million on hand, $3 million of it we're holding from government funds to expense. It's just how we allocate it out to ensure that we know that we've got that funding. Page 19, cash.
Sorry, Tanya, I've got to be rude. Can I?
Yes, Bruce, thank you.
Sorry, I realised I meant to ask you when you were still on 17 about the government funded. It may not be a question direct to you. I was interested in two things. One, I presume we project to spend the 1856, the balance that stands at the moment, clearly income over revenue. I presume we will plan for that to be zero by the end of the project, or are we going to make a gain on the deal? Number one. Number two, and Rob, you may, I don't know who would ask this, who I should ask this of, but I presume we are satisfying easily or comfortably the requirements of those contracts. So there's two questions. So the basic plan to be zero, and we are meeting the government needs, the funders' needs.
You want to answer the second question, maybe we can do a joint effort on the first one. But certainly we're putting some effort around just ensuring we're meeting the requirements of government. And I know we've got two sort of tranches of work. So yeah, we've got a PMO office that's working on this to make sure we're reporting and doing what we need to do. So,
good.
And I think
there's nothing out of the ordinary here, Rob. There's no risks around.
We've got the risks we'll manage.
Yeah, sweet.
And I think we're reporting through to this committee at some stage short. First one, yes, I would imagine we're looking at a net zero at the end of this.
So perhaps I could just clarify that, Rob. Over the period of the contracts, we will be investing our share, which is 4.6 million for climate resilience and 400,000 for biodiversity. 400,000 annually, actually, which will come through as our share here, but was our original budget for biodiversity. So we're leveraging our spend in that area.
Yeah.
There will be lines there because that is our cost. That's our share.
Councillor McCallum?
Just to follow on, I'm just wondering, because we're looking at the shovel ready and it's preset sums of money, it's hard to see from here how much is allocated for this year over a project of 13, which is actually an $18 million project. Should we put in here that reallocated so much for the year, but we've drawn down this far on the way through. Is it helpful?
I think, councillor, that the,
Because I can't quite get up your full year budget. It doesn't quite make sense to me. It looks like we've spent more than we should have.
well, if I can go through it if you'd like. Climate resilience in the full year budget column, we will be spending 5.1 million and receiving 3.7. So the 1.4 is our local share that we've had in our budgets on the way through. It's 25% of the total. I believe those are the numbers that we put into the LTP.
Yep.
The biodiversity projects are the same. We will spend 2.9 million and we will be receiving 2.5. So that's the 430 that I said is our contribution. Effectively is already current in the budget, but we're showing it here as.
I was reading across the line, not vertically, sorry.
Sorry.
I was reading across the line, not vertically.
No, that's fine, absolutely. So the combination of investment by council this year is budgeted to be 1.8. Now I must point out that in the biodiversity project, from the time that we've set the budget, it's now already above that for income, you can see. So we have actually succeeded since the original budget of earning more income from those contracts, obtaining more contracts effectively. So we could probably update those budgets in the biodiversity area. In fact, we should update them for the next report, which will be June.
Soon. Okay, so we're back to,
Sorry about that, that was my fault.
no problem. That's what you're here for, Bruce.
Question on time.
Page 19.
Thanks.
I have a question on page 18.
Okay.
So just asking a question on debtors. I understood that under our sort of a reporting that we would have a debtors report for this period.
I did consider that, councillor. My memory suggested that we have a debtors report every 6 months to come through, and that you've asked for increasing detail on that report. So that wasn't scheduled to be this time. So it was last time, and it'll be the next one after that.
If you look at that table down below, you've got debtors for reporting in May. It's further down the report where you've got the profile of what we're going to do when.
And the activity report.
Yes.
Yeah. I'll follow up on that. I apologise. My version of it didn't say that.
There might be some discussion about that later anyway. Thanks, Tony. Carry on, we'll probably come back to that.
Statement of cash flow, similar to the last time, just reflecting the fact that our rates receipts were stronger than originally forecast, based on a conservative forecast post-COVID. So our funds at 31st of March were 13 million, of which we've discussed 3 million has been held on behalf of. So a better position than last year, certainly. Clean air loans.
Sorry, can I just ask a question, Tony? Again, my accountant could be out there. Can I just look at the cash balances? Sorry, yes, the cash movement and opening balance. Am I right to say that the right-hand column, last year's actual year-to-date, the $2.7 million closing balance is the actual number? Isn't that what we should open with? We've got a 1.6 deficit. Cash deficit, when it looks like we've got a $2.7 million surplus the day before.
I think we're looking at,
March, next March or not?
yeah.
Oh, that's okay, so that's March. Thank you, Brent. No, exactly. Read it properly, Bruce, you're quite right. No, I'll keep quiet. Thank you.
And no change in the clean air funding for this period. Contributing partners. Next few pages, Chair, are our description of our activity report and listing our outcomes for our LTP against the finances for each of the groups of activities. With your permission, I'll take that as read.
Can I just ask one question on that?
Of course.
Tanya, it may be in the orange showing as not being achieved or not on track, but it doesn't actually tell us how far off track. Is it just a little bit or is it big? And if it is big, what are we doing about to get it back on track? There's quite a few oranges in there, there's a lot of greens, but there's quite a few there that just don't quite seem to be on track.
I can refer you, councillor, to the, probably a little bit out of order, perhaps next time we'll put it closer to that same report, but page 117, the long-term report, goes into detail. It has the same KPIs, the same outcomes. It actually goes into details, quite a narrative for each one.
Yeah, I see that, yeah.
Yeah, so our intention was with this report to highlight the various outcomes against the groups of activity and how those financial positions were, and to then draw attention to the, if required, the councillors can dive into the narrative of the other report. And if that's not satisfactory, then we can look to perhaps add some commentary if you feel that it's missing. Hoping explanations are in that narrative then as to why they might be off track.
Welcome, Chairman Hall. Any follow up to that point? Any other questions of that part of the report? Thanks. Okay. Somebody like to move that we note that report, please?
I'll move.
Councillor McCallum, seconded Mr Robinson. All those in favour, please say aye.
Aye.
Against? Carried, thank you. Item 2, the investment report.
Thank you, Chair. So overall, at the 31st of March, we had an increase in the net value of the portfolio of 2.7 million. It is net as in after expenses and taxes. Just point that out because if we look at the financial income statement, it might say 2.8. That's we have a question on that. So there's always quarterly expenses to be deducted when we look at the value of the portfolio.
So is that after the cash withdrawal has been done?
That's after the cash, yeah. So we've had a cash withdrawal of 3 million and an increase in net value of 2.7. And the balance today of the portfolio is very similar. It's just a little bit under 28 million. It's been up to 28.5 and back to where it is. So moving quite a lot at this point. The 12-month rolling average is showing significant numbers. Point out that it includes April of 2020, which was the rebound month from last year. So we went down quite a lot in in March and up a lot in April.
Just on that with the most remarkable actual that we're hit on all benchmarks. I've never seen that before, and significantly in some places. So who are we benchmarking against? I'm just hoping that's as good as it looks.
Sorry, one of the things that interested me, Nicole, and I think we did this in the side boat, was of course we have a balanced fund approach, which was 50-50, so 50% income, 50% growth. I just noticed at the moment the weighting has gone 55 to growth and 45% to income. That's still within the side boat.
We extended the side vote.
We gave them that discretion to just can't remember how big the discretion was.
60-40 rather than the range.
Well, we extended it because it was, it made more sense to be weighted because of the market, more into cash and bonds and interest than it was into shares. So we gave more flexibility. We also gave flexibility around the value of the dollar, what they call it, basically, we gave them a better flexibility range.
Chairman Hall?
It's a supplementary. The thing that really surprised me about the actual MSIPO was the New Zealand bonds and the offshore bonds. I wouldn't have expected that amount of variation. It's quite interesting because I would have thought they've been pretty flat over the last year or two. So to have an actual of 7.8% against the benchmark of 1.9 is quite remarkable, and 5.83 against 1.92. That really surprised me.
Tony?
Can I just add to that, please, Chair? I think we have discussed at a workshop that the portfolio has benefited enormously from a decrease in interest rates, which has increased the value of the bonds. Should interest rates go the other way and inflation occur, those numbers will become inverse. Portfolio theory says if that happens, shares should go up in value and they equal out, but to be seen yet.
Any other questions?
Have to move the recommendation, Madam Chair.
Thank you. That we note the report.
I'll figure it.
Chairman Horrell and Councillor McCallum, all those in favour, please say aye.
Right.
Against? Carried. Thank you. Item 3, cash flow forecast.
Thank you, Chair. So continuing on from our cash flow projection of the last period, now forecasting to the end of the calendar year, we can include the rates at proposed rating levels, which is the assumption in here. A small correction, Chair, at the end of the paragraph under report, it says forecast closing balances, including funds held on behalf, will reduce to 2.2 million. It's 2.2 million overdrawn at 30th September before increasing again with the rates receipts.
Councillor Beard?
Just an explanation as to why costs for May and June are so much more than the other months. So yeah, payments to suppliers and employees, what results do we see a flurry of billing, or have we sat on some of our creditors, or why do we sort of see?
It's the assumption with our councillor is tied back into our forecast for the end of June. So our forecast expenditure for April, May and June is 10.5 million to achieve our total spend of 35.2 million for the year. So traditionally the last quarter is large. Our spend will be that if we achieve that expenditure.
What are the bills that come into that in those months, the May, June, or April, May period that see us?
We tend to have a lot of carryover work through the summer, particularly in the science area that's carried through testing contractors that are billed late, other contractors that come in at the end who are completing their work at the end of the financial year.
We seem to consistently, haven't we, Tanya, that we seem to track low with contractors, and all of a sudden being the last quarter is relative to the first 3 quarters of the year, it was an amazing lift.
Tanya, did you have any other comment?
Not, except that the work that we do here is based on the work that we've done with our managers on their expectations of work and then we compare it to historic expenditure at that same time to calibrate that. It's the information we have to the best of our ability.
Councillor McCallum?
Thank you. Have we seen enough in the cash flow from the rates coming in 3 instalments, or not just the 1 instalment? Are we seeing that big enough numbers to actually identify changes in their cash flow? Not yet.
The 27th of May will be our 3rd instalment for those on that system. I believe we're still under 100,000. So the numbers are not massive yet, but I think we've agreed previously that that will continue to increase slowly.
Any further questions? Seeing I'd like to move the recommendation, please. Thank you, councillor McPhail, seconded councillor Cook. All those in favour, please say aye.
Aye.
Against? Carried. Thank you very much. Thanks, Talia. And we move to item 4, which is Civic Financial Services Annual Report. Rob, are you taking us through that? Read to me? No?
Who's taking us through this one? I think we can take the report as read, Madam Chair.
That's a really good idea.
Mr.
Phillips.
I guess the issue, one of the questions is, do you want to have a delegate at the meeting? In a shareholder meeting, and maybe provide some direction? Actually, we traditionally put a delegate to these things. So,
Have we
No, my understanding,
done a
Chair, is,
proxy?
we've actually used the chairman of the meeting. And we've given direction where we think what is needed. We haven't actually attended the, it does a really good job for what it is for staff, etc. But our portion of that is actually quite small.
Well, I move recommendation 1 then. If the chairman do.
Chairman, you mean Chairman?
Civic Financial Services Chairman. As a proxy for us.
Oh, I see what you mean. Yes, okay.
And then unless there's something extraordinary in the recommendations or what the board's considering, we just go with his recommendation. Unless there's, because most of it is approved directors, remuneration, audit, and basically some business as usual stuff. So there's nothing that I'm aware of that would come out of interest to us that we would actually say we would need to have a certain vote.
The only other option is that we, now that Zoom is much more acceptable, we could have somebody participate that way if we felt it necessary, but I'm not sure that we feel it necessary. Which would you prefer?
If Madam Chair, when we've got 1/2% that probably not a very exciting meeting, that it's probably no great necessity, but that's just my own personal thought on it.
So the recommendation would read that we appoint the chair of Civic Financial Services as our
proxy,
delegate. As its proxy, so as our proxy. Is that clear? Okay, somebody moving and seconding that, please.
Well, we moved it.
Sorry, thank you. Seconded, please. Kevin Horrell, thank you. All those in favour, please say aye. Against? Carried. Thank you for covering that off, Rob. Right. Item 5, RSHL, a draft statement of intent. Welcome, Jane.
Thank you, Madam Chair.
It's all yours.
First of all, is there any comments to make before we pass it as a read?
Jane, I've got a question then, if that's the case, you have any questions. And I'm just, I'm struggling with my numbers today because obviously reading wrong columns, but the basic thrust of statement of intent, if I remove the collaborative trust, being better for RSHL, is the renewal of the actual iris application, correct, next gen.
Yes.
I take it the basic thrust is this is significant investment by the company, therefore it's going to fund it by way of debt.
Currently, that's the model in which
that's what it seems to be from looking at the numbers. The only question I had then was the statement of intent says that we will not go below 60% equity to total assets.
Yes.
And it would seem to me, so given my problem with numbers today, I've been going crazy this afternoon, I'm struggling to see how the 2023 and 23-24 meet that test. If you go to page 86 of our agenda, page 10 of the actual report,
Yes.
you've got total assets in the out years of 4.3 and 4.2.
Yes.
And we've got net assets, which is the same as equity, decreasing 2.3 and 1.248. If you take the successive years, those as a ratio over total assets, it's 54 and 29%. And that seems to be breaking the rules
Yeah.
that the board have set for themselves. And I think on top of that, it raises the question, what confidence do we have in looking at these 3 years that there is a pathway back to correct the financial position?
I'm going to take that back to the GM of RSHL because I'm not sure that it's been made in full consideration of that in the next 3 years. There is definitely a desire to decrease the amount of money that is currently being invested into current IRIS.
Yeah.
And tomorrow is the opening of the envelopes for IRIS Next Gen. So
right.
yeah, so that's
critical time.
so it's a very critical time.
Yeah.
So yeah, I will get clarity around that question for you.
To me, can I be upfront? To me, this is fundamental because I'm looking at what is the business plan to achieve what clearly is the key objective, which is that we renew and refresh IRIS. And this doesn't seem to be, these numbers don't seem to fit.
Yeah.
Now,
I'll
I
get
could be wrong.
clarity on those.
So I could be wrong, who knows today. As I said, I'm struggling with my numbers today, but
No,
just at first flush, it doesn't work.
yes, and it might be the way that's been reported, I think, more than giving consideration to the
Yeah,
future.
you know, it's on, sorry, I think it's further back up that I noticed that it said it will maintain a,
Yes, that's-
under four ratio of consolidated shareholders funds to total assets. Somebody can help me there and say that I'm reading it wrong. I'll be out of great knowledge.
I will get clarity on that because that's. I think
They'll be capitalising any further expenditure. So I mean, you can visualise that once they've depreciated the current IRIS down to zero, there's not going to be a lot of equity left.
No, that's right.
And then they start spending on the new IRIS and they'll capitalise that. So that'll be your asset on one side. I know that'll, and if you add no new equity in, then you're going to get your 50%, aren't you? You've got asset and liability growing at a similar level.
That's right. I mean, the asset is technically backed, the liability is technically backed by a growing asset called the software IRIS. But I'm just wondering about actually the funding flows that mean that actually we're not left with a rundown equity, high debt and an asset.
I will get clarity before I.
I've got a question from Chairman Horrell.
Just a comment on Bruce's question. There was a paper went up to RSG, and I wasn't actually there when that was discussed, Rob, but there appeared to be a fair indication that the other regional councils might come on board, and that may solve some of those equity things because a lot of those things are common, and Rob might be able to help us out on that. But I think that might solve the equity thing. If they're coming to the party, I'm assuming they're bringing some shareholder stakeholding cash with them.
There's a paper, Bruce, that's been written by PwC right now, and we haven't got the outcome of that paper, and it is around what the future actually looks like for RSHL and in the funding model that will fit in with the new structure, because there'll definitely be a new structure. So there's a hopeful that there'll be 11 of us on Next Gen, with the hope of 15 is, all 15 will be on board, but 11 is the target.
Right. And
So,
that's
yes,
probably
it
going to give me the funding. I mean, I take your point on about where it's at, but you're still left after year 3 with substantial debt and asset for which at the moment you're only budgeting on, unless that budget's changed, budgeting on the existing 6 whatever shareholders. And you want to know, so what is actually the escape plan?
I'll get clarity on that, and there was.
Councillor McCallum?
Yeah, thank you. I just follow on from that because one of the things in my mind is how do you repay their debt? There's no actual cash flow. So I think the business case needs to stack up with the 6 expenditure and then the outcome. If you gain more in, there's no mention of that here. There may be some variable, but unless they actually sign the line, there's no actually definite income stream.
The debt for next gen?
Yes.
Yes, so that's, so that,
Yeah, so it's not clear by here that they've got a funding mechanism to actually repay their debt. Or more capital going in, or what is the costs that we
increase
have
of
to,
cut of the
contributions?
customers.
Yep.
Potential increase of contribution towards that
Because
to,
the follow-on of that is, we've seen Hamilton have a big cyber attack, so how secure is the cloud under new generation 2? These things seem to take longer and are more expensive, and they're more complicated as you go through not only the development, but you've got to transition what you've got into the new, so there's a lot of
the whole
testing and,
migration plan.
yes, so those things will end up being more costly and time consuming. That seems to be the case, so it would be nice to know what strategies they've got around controlling that and understanding that process.
Yes. So there's a full meeting tomorrow on that will highlight some of those, the plans that are there along with the pricing. So we'll have a more of an indication tomorrow around what the pricing might look like. And they're doing scenarios over 10 years. So it's a 10-year funding.
So Chair, we can get some more clarity around the numbers. Is that what we're seeking before you wish to approve the draft statement?
I think that is what we're asking.
Yeah, well, I think the draft statement doesn't actually balance.
No.
That's if I pick up what Bruce is saying,
It
and there is some,
but it doesn't sit with the, it doesn't sit with
falls
the
outside the
financial.
parameters that it's
Comfortable
actually
balance.
stating.
It doesn't meet condition number 4
That's right, now with the
on the
condition number,
numbers that are here.
condition number 4, I can live with getting down to 29% if I know what is the 10-year strategy. That actually rebuilds the company.
And this is only a 3-year strategy that doesn't have that horizon.
Because I can't remember now, Jane, but I looked at user fees, because I think that's the ones from councils that we have on board that are not one, you know, and that's just inflation. That's not,
No.
we're not prepared to put our name on the line that we've got another 5 customers.
No, and that's what this doesn't show,
Yeah.
the growth of the company.
It's just what is planned.
So-
And Chair, the other thing is, I guess, just to note, and Jane touched on it, but the regional sector is seeing, and the regional CEOs are seeing this company as a vehicle for achieving shared services around collaboration in a whole number of areas. So we've got a regional sector office, which has a budget of $2 million. We've got a managers program, we've got bio managers, EMAR. So there's a series of regional council projects that are going to be brought in under the umbrella of RHS.
And I think the PwC report will highlight the changes that are afoot for the company, and it'll look quite different than what it is right now.
Yeah, we can get some clarity around, actually, you don't appear to be playing, so meeting your own requirements, and maybe it's an explanation about that and come back to that.
So we will,
Timeframes around approvals.
yeah, that's my next question.
So there's a board meeting on the 24th of June, and the response from council was slightly overdue because of the timing of this meeting. So I will go to Mark and get clarity around number 4 and what that actually looks like for those future years. And can we make it clear about what?
So given that we're not going to move these recommendations now, when are you going to need them?
I'll go and get the answers and then I'll give them straight back. So when's your next meeting?
First of July.
Soon?
First of June.
I can't remember either.
Yeah, so if it's 1st of June, then that's
Can't be, it's only a couple of weeks away.
There's one on 1st of July.
July. Okay.
That's too far away, I'm guessing.
Yeah, so I'll see what.
So a couple of options here, we can either come back and clarify, and then we could circulate through you, Chair. To clarify the reasons for not meeting or seeming to meet the standards. And maybe it's an approval subject to us coming back to you with that. Would that be appropriate, or would you?
Is the meeting comfortable with that? I'm not sure that I
If
am.
either that or would, there's an ordinary meeting of council that you could possibly ratify that on the.
Extraordinary business, yeah.
Yes.
Yeah.
Let's bring it back.
Yeah, that's better. Yeah,
Council on
The 9th of June.
thanks, that's much better.
And just to clarify, so it's having more clarity around number 4 of it doesn't appear that we're going to be having more equity to total assets exceeding 60%.
It doesn't meet those
Doesn't mean
requirements.
Great. Good questions, thank you everybody.
Sorry, and I mean, I think tomorrow for the 9th, the meeting you have for your council meetings, which probably on online, you'll have the business plan. Which you're saying Pricewaterhouse is giving the financial model for going forward, that's what will be most helpful. Because there's that whole question of significant debt, essentially debt funding, and new development, which isn't necessarily bad in its own right, but what's the plan?
Thanks, Jane.
Thank you very much.
Right, so we won't, we'll move on from that recommendation and eagerly anticipate it at the council meeting. Takes us to item 6, does it? Yes, no, no, it doesn't. 7. Or are we taking those before this?
You want to do item 6 even then?
I think we still need to do 6. Yep.
So this is just hangover from last meeting, we have the audit report. It was in a report for RHCL and it's now come through and it's for your information and it's doesn't raise any issues of they're comfortable. This is a short answer in their audit.
Councillor McPhail.
Comment just for heads up. This is this company, I wasn't going to go to the last topic, but a company that was brought up at a meeting that I recently been involved about where all the bad stuff's going to be held. From an activist, from a conspiratist theory, and they were and it was some quite interesting information what Environment Southland had done, raising $13 million to borrow the state. I don't know where the figures came from and all this, but it's just one that obviously there's people looking at it, and it's just a heads up that it was a load of rubbish as far as I was concerned what they were saying, but they sitting in a room full of 250 people right now where it all the information comes out and data storage and all this. It's just a thing that sometimes maybe I wouldn't be surprised to get questions asked about it in the future. And it would be also good just to have a 3-line briefing of this is what this company does. Just to throw back within a summary. The heads up.
And yeah, I've been in a couple of meetings, not those ones, but they're doing a great job there. Where the discussion around confidentiality and where does this information sit, and what's going to be available and is discoverable. So they'll be looking at Iris as something, this is the information is, and could someone get into it, and it's going to be made available. So that's the context of it. So I absolutely agree. So yeah, we'd be useful to get some 2 or 3 liners to say actually here's what it is and here's what it's not.
There's also mentioned World War II and United Nations, so we were talking about Bush's SNA, so that's how it works.
But Iris itself has probably got conspiracy theorists going, well, if they start thinking about the deep meaning of Iris, so that'll be interesting.
What does that stand for? What does it stand for?
Line up.
So Rob, where would we expect that 2 or 3 liners to come from?
Jane, she's going to message you, we'll give her the job.
Excellent.
Yeah, it'd be reasonably simple, I think, between Jane and the comms team. Just this is our shared service, and it makes sense for us to be doing it collectively. Those sort of things.
Yeah.
I mean, it's we have our software and stuff developed. So this is the blah blah blah. So I've been trained by some of the best.
Just on software and security, we're fairly comfortable at the moment, not going to get hacked, ransomware, as good as we can.
Our team certainly is focused on, as aware of the risks and everything else. I'm putting some focus on this.
They're saying the health board one was through a staff member opening an email attachment. It's allowed.
Amy, did you want to comment?
Yes, sorry, I was just going to say, look, there are constant reminders which go out to the staff. We're very aware that phishing is an activity that happens frequently, and, you know, people are constantly trying, you know, the next way in and the next way in and the next way in. So in terms of, you know, our staff are aware and advised on a regular basis, yes they are. And we have our firewalls in place, which are really, you know, stuff on it. It's one of our big risks, and certainly I know that the IT team are highly involved and sensitised to it.
I think we're all getting emails at the moment. They're pretty clear they're dodgy, so they get straight to it.
Yeah, some of them are getting past the spam filter.
They get past the
One or
spam.
two.
What we
Not
get,
many, actually.
we get stuff that looks very, very real, and if you didn't know what to look for, it would seem to be, there's a lot of antivirus stuff running around now, because apparently I'm running out of my protection, you know. So some of them are quite real, Rob.
Yeah.
And you only pick it up because the email address doesn't make sense, or, you know, there's some little things there, it's just that you gotta pass that test first. Yeah, so it's getting harder and harder sometimes to find the real emails.
Okay, so we have still got the recommendation to deal with, which is just to resolve to note the Audit New Zealand report. Thank you, Councillor Farr, seconded Chairman Horrell, all those in favour, please say aye. Against? Carried, thank you. Takes us swiftly on to the long-term plan progress report. Thank you, Wilma. Welcome.
Madam Chair, I just need to point a small matter out, which I was clarifying with Tanya, and I'm not certain quite how that slipped through the cracks, but it may just have been a handover of personnel last week. That in the financial report, it's reporting that there are 7 targets off track and 11 on track, whereas the long-term plan report is reporting that there are 12 targets on track and 6 on track, and that's the report that data should be taken from. So I think this report was updated more recently than the financial report. So you've adopted a financial report that says, or received a financial report that says 11.7, which should read 12.6. I was considering, Madam Chair, that I should have a boilerplate statement for this, because I'm going to say very similar things to the last quarter's conversation that we had about this report. The amber items on this report are, as far as I can see, all going to remain amber towards the end of the year, so this quarter and the next quarter, and I'm very happy to talk to those that are amber for you. We took one of the amber set out of amber because I felt that it was, which is 3.1, which has been reported as an amber process, but actually we're talking about deadlines that are further afield. So in fact, all the work programs in this year we now are up to date on, so we feel very confident that it should be green. So that's why it's gone from amber to green. The others that are in this report, however, are going to remain amber. The 3.2, we reported the last 2 quarters that we'd moved the deadline from the 30th of June 2022 forward to the end of June. So again, it's a strange set of reporting standards. We're reporting that we are amber against something that is actually for the next financial year. So it speaks to the nature of the quality of what we're reporting against, that we are receiving ambers. So this is to Councillor McCullum's point, how off track are we? These are because we're reporting against a set of performance targets that are many varied and sometimes not in the 3 years that we're reporting against. So this has changed in your draft LTP and the levels of service for the coming 3 years. They're a very different set of reports. So moving forward,
The same for the equality, we discussed this earlier today. Part of the deadline changes relates to the National Environmental Standards. We have moved this work to start in the new financial year. That's been the case all year, so we'll continue to September. The biodiversity management is, this issue I think will be picked up in the last quarter, but I would imagine will not be finalised, and that is that there is the draft strategy, as I understand it, has reached a point where it does require the other agencies involved in it to advance work on their behalf as well, and that has not advanced with them, and so that needs to be kicked down the road a little bit harder, but I don't see that being finalised before the end of the financial year. So that's work that's with our colleagues. The science strategy, level service number 8, that project actually has changed and we've been reporting the same status all year. There is a large piece of work underway, as we're well aware, through the Jobs for Nature that has superseded this, and so this is we obviously need to have a not applicable category for this rather than amber. Moving forward to the last couple. So item 9.2, these are deadline changes that have moved out. So to Councillor McCullum's point, we're talking a change in a matter of months. So we're reporting amber against these, and that will be the case. We foreshadowed those earlier in the year. Item 10, however, we've agreed is not our level of service metric, and as a result of that, it's a metric that we're never going to meet. Hence a change to our levels of service in this proposed LTP. So that is pretty much a very similar conversation to the one that we had last quarter. I'm going to have it with you at the reporting at the end of the financial year. And foreshadowing, we're looking forward to a new set of reporting from the new LTP.
Yes. Questions? Yes.
Yes, sorry, can I just ask you a question? So just to get this right, Will, but I just want to try and get this in my head. The critical thing I'm interested in, I guess, ultimately is the landing position, which I think you're hinting at in terms of 30 June.
Yeah.
You're saying that from these results, notwithstanding the amber, you're comfortable that in effect the program we set ourselves for the current year will be achieved, with recognising some of the deadlines have been moved, etc.
So there are definitely deadlines that have moved.
That's right.
In about 2 of these, which means we're not meeting
Yes,
this service level.
you can, given that
And
the deadlines moved for a
We're
couple
not
of reasons.
going to.
Yeah.
There are deadlines that strangely we're reporting against, which are the future,
Yes.
and so there's an interpretation by those working on these that somehow their work, there's no interim deadline to be able to measure are we achieving the interim way through. So it's reporting as amber, which is odd.
Yeah.
But there's no alternative for us to report.
Yeah.
There is also, in one case, a measure which we've adopted, for good or for ill, which is not a level of service, it's an aspirational measure which is not achievable. So it's a measure that's not going to be achieved. So this has been the state since I've been here. And that's why we've reviewed our levels of service and the way we report against them and what those reporting measures are. So that will flow through to the new year. I think in terms of are we getting work done, yes, there are some projects that are slower. And I would say 2 or 3 of those in there are ones that have slowed down.
Would you put any of those on a sense of risk? And I use that word deliberately.
Well, actually, one of them in here which relates to the coastal plan, what I would say about that is that we've acted to address the matters of slowing down by looking at an interim set of arrangements around that coastal plan to address the riskier parts of our regulatory framework at the moment. So we're coming back, we foreshadowed that today in a workshop and then to the next strategy and policy meeting with the proposal around how to actually work with that. So there is a piece of work underway to mitigate the risk associated with that. The only other risk is the deadlines are just simply about working the deadlines, I think.
You know, and I guess my follow-up question then is, what I'm hearing you also say is, we've all had used the LTP as a chance to correct the deficiencies of this particular report, at least in terms of its target setting. Sweet, thank you.
Councillor Beard.
Yeah, thanks, Madam Chair. So just on page 132, regional leadership, communications, the perception survey. Last done in 2019, is that what I gather from that?
No. So let's have a look, sorry, 132? Oh, so it's done in arrears, so it was done in this financial year about the perceptions from the previous financial year. So we do it at the beginning of, it's a very strange, I questioned the timing of this and we have changed the way we're doing this perception in the future, is that we strangely report on, we do a perception survey in this financial year, looking back at the previous 12 months. So in the first quarter of the new financial year, we ask people's views based on their experience in the previous 12 months.
All right, so yeah, September 2021-ish?
So in about August next year, we do it in arrears for this current financial year.
Yeah, so 3 months' time or whatever, we'll look back over the last 12 months.
It'll be the last time we do this.
Are we going to do this again?
No, we're not. We only have one level of service in relation to perception, which is not necessarily that useful a level of service. So if you read through the levels of service in the new proposed LTP, the kinds of indicators that we're looking for are far more varied and relate more to our work than to people's attitudes towards us.
So as far as the survey that we're doing in August, September of this year, 2021.
We're required to ask this question, so we'll be asking this question.
So that's the last time. Will you review the other material or other questions that the community has asked?
So we are not going to ask an annual survey of the community. We're going to have an ongoing program of insight in which we'll be asking a lot more questions of our community in relation to our work and performance. Asking people how they feel about us in 12 months arrears, in 1 month hit annually. This is not giving us a particularly useful view about the quality of our service provision or their views on any matter.
So we're using the third-party company to engage in that, doing that phone survey work?
So there's a variety of different methods that we'll be using for our insight program going forward. So some of them will be market research. So for this is a market research company that does this work for us. We have to maintain it with the same market research company, and we ask the same question because we have to ensure that we have a data set that replies, that reports to this. But for future reports that are part of the engagement and communication measures and going forward, that will be a variety of different methodology.
Thank you.
That sounds much more appropriate for the day and age in which we work.
Although I did note, I take it if I read this correctly, 100% of farmers agree that our information sharing is compelling, relevant and timely.
When prompted to the question.
When prompted to the question. Yeah.
And 94% were not prompted. Yep, they're good results.
Thank you. Somebody like to move then if there are no further questions?
Yes, I'll read that.
Thank you, Bruce. Seconded. Councillor Beard, all those in favour please say aye.
Aye.
Against? Carried. Thank you very much, Wilma.
Thank you.
And item 8, the annual activity plan. It will be Tanya or Amy, you will go. Thanks, Tay.
Thank you, Chair. So we present to you the next 4 quarters proposed activity plan. I note though, unfortunately, that the very first column should be the 1st of July. Somehow, the gremlins in this month. There is an OPAC meeting on the 1st of July and there will be a risk focus meeting. So all our standard items will appear at that meeting. And I'm looking at this thinking that it's an ideal time to update the shovel ready, as Rob alluded to. So we expect the shovel ready report at that meeting. Other than that, Chair, I would just like to suggest also to Councillor Beard that the age debtor report, the intention was, and you can agree or disagree, the intention was initially to have it in Q2, reported at the end of Q2 being the end of December, and reported at the end of June being the end of Q4. So they're the best 2 times of the year to be looking at what our debtors position is. So we did report December past, and we saw that in February, and it was my intention, and this is where you asked for us to provide some greater details, it was my intention to do the same at the end of June. So those ticks need to be moved along 1 box each. But other than that, this is what we propose to bring to the meetings in the next few months.
Bruce.
Yeah, look, could I, so Taylor, I've no trouble with it, it's a great program. I also want to register a moderate concern, but also want to offer a solution.
Excellent, we like that.
It's okay. And getting this going, it represents something that's really good. But then I go to page 135, and we've got 4 planning to be developed. Now, we've had this list for a long time, and I don't think it's moved. And for instance, a sensitive expenditure review is probably a smart thing to do for a public sector entity, and yet it's just languished there. I go one up, internal audit. I would think that in the life and the developing maturity of us, the fact that we haven't even thought about, as a committee, it's negative, that it is, I guess, that we haven't contemplated what would be the value proposition of internal audit in terms of our risk management. For instance, is not good. And then you can see there are some time-bound dates down there which seem to have probably passed us, and I don't know whether we should have, we shouldn't probably have reviewed the fund manager and the SIPO, but I'm not certain that we have. I can be corrected on that one. So my view is we've been a wee bit remiss if we just, as we have in the past, just agree to this, because actually I think we're basically tacitly acknowledging we won't do our full job. I think the idea of finance and risk makes sense given the scope of the committee, but in my personal and dare I say professional view, the risk column is underdeveloped. And it's been underdeveloped for quite a long time, and I accept their reasons for that. In fact, I was talking with Wilma earlier about last year, and everything that was coming left, right and centre at us. I can understand why that risk column, for instance, has not had a chance either for attention from management or indeed even ourselves, given the issues. But I think that risk column needs to be addressed because it isn't delivering, in my view. So the solution, I would like to suggest that if you would agree, I'm happy to perhaps really I'm prepared to take ownership and come back to the committee with actually how we deal better with our risk. I'm conscious that, for instance, we had a very good session here with Neil, which should give us, and I hope it's been captured, a good way to start proper, formal, quarterly risk reviews by this committee, which we aren't doing yet, but we've done a lot of the good work, and I'd like to see that cemented in. So with your leave, with the committee's leave, I'd like to suggest that I come back with some sense about what we should be doing on a quarterly basis, and I'd like to suggest that you, Madam Chair, and Mr Deputy Chair, you might help me. Because I think at this stage, we aren't tackling risk, really. I'm sorry, we are, Rod, it feels like I'm going to crack at you. I enjoy your emerging risk stuff. We've got, we do have good staff engagement in PX, but we still aren't dealing with our top risks. We still aren't dealing with actually how do we gain assurance over those. And so I'm putting a small criticism there, but I'm offering that actually I should help find the solution.
Rob?
Chair, can I just add a perspective? I'm keen that we see where Neil's got to commission to do some work. This may well be appropriate, but I would really like to see where he's got to, because I'm saying to him we need to have a program that we can talk at the risk committee around what are our top risks, everything push. So I'd like us to, with your leave and the committee's leave, to see where Neil's got to before we do any further. But I don't want to duplicate what he's doing, and I guess.
Amy?
Sorry, just to add to Rob's point, to say that the work that you did a few weeks ago is was captured and is currently with our comms team for review and wordsmithing, and we will be bringing that back via the risk advisory group, which we've talked to you about before. They'll be shaping up some of the further. So just as a brief update to where we're at with that, that should be that risk advisory group. We're trying to get that in the diary. It should be in the next couple of weeks. So we'll get to you from you.
So we need, picking up Amy's comments, we need to, though, to come back to this committee with here's how we're going to deal with risk and identify the top risks, and then let's see what else is needed at that point. So this is risk needs to come to this committee. That's the key one.
I'm very happy to wait. If that is the case, I perhaps am just serving, notice that that actually this has been outstanding, and I mean that in a negative sense. So it would be great. Otherwise, yet again we're missing the trick for this committee in terms of risk management.
Totally agree. This is a priority.
Councillor McKellen?
I was just wondering, Neil's done some work. It'd be nice to know what that timeline is, not just to report back, but to complete that work. That would give us a better understanding where he's at, and then we can look at some of the stuff, because that last box there, I'd quite like it not to be there. There's nothing there in that planning box at all, but it's actually been put into our program.
So my view is we need to remove that box. So it's been dealt with. And so let's see where Neil's got to, if that's going to do that. If it's not, then and what else do we need to do? Then we can talk to the committee about what else is needed. So, but I'm hearing the message loud and clear, and that's really good you raised it.
Okay, I'm quite keen to have that progressed, at least a baby step, one bite of the elephant, please. That'd be really good, and then we can, once we've got what we've got, we know where we're going. I think that makes sense. Any other questions or comments on the activity plan? Somebody like to move?
I'll make all the noise. I'm very happy to recommend that we adopt this. Noting, I think we should note actually the management will come back with the upgrade, the quarterly
Thank you. Are you happy with that note? All those in favour, please say aye. Against? Carried. I see that some people are yawning,
Once.
and it's been a longish day, so would you like to have a cuppa? And then we can return to public excluded after the cuppa. Mel tells me that it would be most helpful if we moved into public excluded now, while we've got the reasons for the public.
Right.
And then when we reconvene, we can just carry straight on, because we had a bit of confusion last time. The reasons are,
to carry on with our prejudice or disadvantage negotiations, including commercial and industrial negotiations, and to prevent the disclosure or use of official information for improper gain or advantage.
thank you,
I'll second that.
thank you.